Well, it's been 1 week since I did my last podcast. And when I did my last podcast, it was also on a Wednesday. And what prompted me to do it that day was the fact that it was the first day that gold broke 4,000. And there was a lot of media attention. Of course, they missed the bigger picture as to why gold was at 4,000 and what it portended. But they did cover it. You know, media had pretty much ignored gold all the way up to 4,000. But when it got there, all of a sudden, it was a bit of a story. And now it's kind of slipped, back on, the back burner again. But here we are a week later, and gold is now over 4,200. So gold has added $200 in 1 week. Silver closed today above $53. Remember, $50 was resistance. It was a big double top. And what was I saying on this podcast? I thought that we would blow through that double top and that 50 would become resistance, which is now the case. And in fact, if you get a chance to buy silver anywhere near 50, do it. But again, I got no problem buying it at 53. I said the same thing when silver broke above 30. I said 30 is the floor. So if you have to pay 32 or 33, what's the big deal? You don't have a lot of downside risk. So even though silver might pull back to 50 and a half or maybe 49 and a half, so what? Buy it now. It's not that much downside, and it may never pull back. We may never see sub 50 silver again. Now, maybe we will. I don't know. We're only $3 above it, but we may be at 60 before we're back at 50. Look at the momentum. In fact, if gold continues to rise $200 a week, we'll be at 5,000 a week before Thanksgiving. And if we keep rising by $200 a week, which percentage-wise would be a smaller percentage if we're at 5,000 than 4,000, but if we keep going up at 200 a week, gold will be at 6,000 before Christmas. Now, I don't expect gold to be at 6,000 before Christmas because there's got to be pullbacks at some point, although maybe not. Who knows? But it's clear that gold is going up. I mean, year to date, gold is now up 60%. Silver is up 84% in 2025. We still got 2.5 months left of the year. We have not had a year like this in precious metals since the 1970s. And that's not a coincidence that what's happening now hasn't happened since the 1970s because we are living through a similar economic period. It's not just that we got stagflation, which we had in the 1970s, and we're going to get a lot more of that in the 2020s. But again, 1971, we kicked off that decade going off the gold standard. That's what set all this in motion. That resulted in a major dollar depreciation, and gold went way up during the 1970s. Well, something is happening now that is just as significant and maybe more. So back then, we went off the gold standard. So we told the world, hey, we're still on the dollar standard. We're just going to not back it by gold anymore. So we're going to renege on our commitment. We're not going to give you gold for your dollars. You could just hold on to your dollars. And the world basically did just that. The world stayed on the dollar standard, despite the fact that we pulled the rug out from under them in that we reneged on our promise to pay gold for their paper. But they continued to, keep the dollar as the reserve. Now, they marked the dollar down. The dollar lost 2/3 of its value against other currencies, but they still held it as their primary reserve asset. What's happening now, over 50 years later, is now the world is taking action. They're pulling the rug out from under us. They are now moving off the dollar standard. And this probably has even bigger implications for us than going off the gold standard did, either for them or us, because our entire economy, our entire way of life over that time period has evolved to become dependent on the dollar's reserve status, dollars that we can create out of thin air, not that we have to back by gold or anything. We just conjure them into existence, and we use those dollars to buy consumer goods that we don't produce. So we get to live beyond our means. And then the world is in a relationship where they loan us back the dollars they earned, selling us stuff that we didn't make, at low interest rates. So now we can go into debt and buy more stuff, and we can buy assets, and the stock market goes up and the real estate goes up. But our whole phony economy is completely built on the foundation of the dollar's reserve status, and that's the rug pull. That's what's happening. That's why gold is doing this. Right? It's not just a random coincidence. And of course, the significance is being lost on just about everybody when I hear the discussions on gold. But probably one of the most significant admission that I've heard was from Jamie Dimon, who is a highly respected guy. And Jamie Dimon was quoted as saying, gold can easily go to 10,000. Easily. And I agree. It can easily go to 10,000, and it very well will go to 10,000 and a lot higher than that. But here is the more significant aspect of the Jamie Dimon quote. Jamie Dimon said, quote, "This is one of the few times in my life it's semi-rational to have some gold in your portfolio." This is one of the few times in his life. I mean, he's my age, I think. He's been around for a long time. But he's saying in his entire life, this is one of the few times that it's semi-rational, like not completely rational, but at least there's a modicum of rationality where you might want to have some of your portfolio in gold. Now, first of all, clearly, if gold is above 4,200, and 20 years ago, 25 years ago, it was below 300, and that was certainly within Jamie Dimon's lifetime. It was within his career, not just his lifetime. But obviously, if gold has gone from 250 to 4,000, that means it's always been rational to have gold in your portfolio. Not just semi-rational, 100% rational. Gold has outperformed the S&P 500 since then. So if it was rational to hold stocks, it was certainly rational to hold gold. The significance is that even though it was rational to hold gold 20 years ago, 10 years ago, 5 years ago, Jamie Dimon didn't realize it. See, what he's actually saying is not that this is the first time that it's rational to hold gold. This is just the first time that he understands the rationality. You see, up until recently, it was just guys like me. I would come out and I would try to explain to people when gold was 300, 500, 800, 1,000, 1,200, 1,500, 2,000, why they needed to own it. And people didn't see the rationale, right? They thought I was nuts. They thought I was crazy because I was worried about the dollar. I was worried about the deficits, the budget deficits, the trade deficits.
Well, it's been about a week since my last podcast, and when I did that one, gold had just broken above $4,000 for the first time ever. That was a huge milestone, though you wouldn't know it by watching most of the financial media. They ignored gold for years on the way up, but the second it hit $4,000, suddenly it was a headline. Now here we are just a week later, and gold's already over $4,200. That's a $200 gain in 7 days. Meanwhile, silver closed today above $53, which means it's decisively broken through that old $50 double top that held for decades. Remember, that $50 mark was like a glass ceiling, the same level we hit back in 1980, and again in 2011. I said right here on this show that when silver hit that level again, we'd blow through it, and that $50 would flip from resistance into support. That's exactly what's happening. So if you get the chance to buy silver anywhere near $50, do it. In fact, I've got no problem buying it at $53 either. I said the same thing when it broke through $30. That's the new floor. The people who waited for a dip back to $25 never got it. The same thing's going to happen here. Maybe silver pulls back a buck or two, maybe down to $50.50 or $49.50, but so what? You're quibbling over pennies when this thing is setting up for dollars. You could be at $60 before it ever sees $50 again. The momentum is explosive. Now let's talk about gold. If gold keeps rising by $200 a week, which it's done for 2 weeks straight now, we'll be at $5,000 before Thanksgiving. Keep that up and you're talking $6,000 before Christmas. Now I'm not saying it's a straight line. We'll get pullbacks along the way. But let's be clear. Gold is in a confirmed, powerful bull market. It's up 60% year to date, and silver is up 84% in 2025. We haven't seen anything like this since the 1970s, and that's not a coincidence, because we're living through a very similar economic environment. Stagflation, massive deficits, energy shocks, and most importantly, a global shift in the monetary order. Let's rewind the tape for a second. In 1971, Nixon took the US off the gold standard. That was the trigger that unleashed the 1970s inflation. The dollar was devalued. Gold went from $35 to $850, and the US lost 2/3 of its purchasing power against other currencies. But here's the thing. Even after that betrayal, the rest of the world stayed on the dollar standard. They said, okay, fine, you won't give us gold anymore, but we'll keep your paper because it's convenient. That arrangement gave the US half a century of privilege, the ability to print the world's reserve currency and buy real goods with fake money. Fast forward to today, and we're at the opposite inflection point. Back then, we went off the gold standard. Now the world is going off the dollar standard, and that's a much bigger deal. Back then, the US reneged on its promise to redeem dollars for gold. Now the rest of the world is reneging on its promise to hold dollars. They're saying, you know what? We're done financing America's deficits. We're done holding IOUs that are guaranteed to lose purchasing power. And they're right to say it. Our entire economy has evolved around the privilege of being able to print money for imports. We don't make much anymore. We just consume. We buy things we can't afford with dollars we create out of thin air. And then the rest of the world takes those dollars, lends them back to us at low interest rates, and uses them to keep their own currencies pegged to ours. It's a toxic codependency. We got to live beyond our means, and they got to export their way to growth. But now, that relationship is cracking. The world is moving on. We're watching the slow-motion rug pull of the dollar's reserve status. And that's the real reason gold is doing what it's doing. It's not random. It's not some safe haven panic. It's a structural repricing of money. This is the endgame of 50 years of monetary abuse. You can almost hear the hinges creaking under the weight of global debt. Even Jamie Dimon, the same Jamie Dimon who used to sneer at gold, is now on record saying gold can easily go to $10,000. That's not me saying it. That's one of the most establishment bankers in the world. But here's the more interesting part of his quote. He said, "This is one of the few times in my life when it's semi-rational to have some gold in your portfolio." Semi-rational. That's what he said, as if it's only halfway logical. The truth is, gold has been telling the truth about the economy the whole time. It's just that the media, Wall Street, and central banks didn't want to hear it. When gold rises, it's not that gold is getting stronger, it's that the currency is getting weaker. And that's the part they can't admit, because their entire empire runs on the illusion that the dollar is stable. This is why I keep hammering on the point. You can't print prosperity. The US has been living off credit expansion for decades, and we're finally hitting the wall. The federal debt is over $37 trillion. The budget deficit this year is running at nearly $2 trillion, and interest payments alone are the size of the entire defense budget. Meanwhile, the Fed has boxed itself in. If it raises rates, it bankrupts the Treasury. If it cuts rates, it reignites inflation. There's no painless way out. And when confidence in the dollar cracks, and it's cracking right now, the world will run, not walk, to real money. That's why gold is exploding. That's why silver is going vertical. And yet, if you turn on CNBC or Bloomberg, they're still talking about AI stocks and rate cuts. They have no clue what's actually happening. They're living in denial.